Good afternoon, everyone, or good morning to anyone out there in WA that's joining us. So today's webinar, we're preparing your business for end of financial year legal essentials. I'm your host, Connor Spencer. Now, first of all, actually, from a registration sort of standpoint, we do find most people are registering companies around this time of year, between that sort of May, August time. So those of you who've actually just started your business, congratulations on getting started. We hope we can continue to assist you as it grows. And for those of you who actually been using LawPath for the last year or up to 5 years, congratulations as well. So you can continue to pursue your passion as a business owner. And as we'll go into this webinar, there's not a heap of content, but June is very much a reflection of how things went, legally and financially for you, obviously in the 2023, 2024 phase. But it's also about obviously planning ahead for that 2024 to 2025 financial year. I think it's often like a bit of a relay race, where the runner passing the baton to the next runner when it comes to June. As this time of year is also where bulk of legal changes get made from the government, new laws get introduced, legislation is changed, especially in that employment and workplace space. So it's absolutely crucial when going through compliance for this time of year. What we actually get a lot of our clients to do, we send out a newsletter, but we get them to actually book in some rediscovery calls with our lawyers to make sure they're up to date with any of those changes being made. Often, a lot of that, if it is employment related, it's around superannuation, awards, pay rates, all that good stuff. Some of you may remember from, I think it was 2017 to 2020, Coles underpaid their staff and it paid incorrect super for nearly 8,000 employees. So it was about 150 million unpaid, and it was a 63,000 fine per infraction. So if a big business like Coles can make a mistake, we ask people to not follow in their footsteps and speak to a professional to get some advice where that's concerned. Um, so yeah, when changes are made around this year, especially it's a priority to speak to someone, especially if you also have a very specific or niche industry, get some advice around there. Just tick that box and make sure you're on top of things. I know with my own very small business, I've used Damon for some quick information. My own business is my baby, and I'd like to say one day, I'll sell it off and retire early so I can sip margaritas in Fiji. I'm not going to let anything legally or from a accounting perspective come and figuratively bite me in the ass. So if I have the tools and the budget available, I want to aim to prevent it. But it's not about me. On today's agenda, we will cover obviously a bit about LawPath. I'll introduce Damon and his relevant experience for those new to him. Damon will cover quite broadly what are the top legal matters to consider before end of financial year. We have a Q&A session at the end as well. And Damon and ourselves at LawPath have a special end of financial year offer for everyone in this webinar. So finally, I'll speak to how LawPath can help, and then we'll conclude with a Q&A session. How often do you get a chance to have a lawyer speak to you for free for 30 minutes and then answer your questions? So if at any point during this webinar, you're reading the slides or you're hearing something and you have a question, please submit it in the Q&A chat box. Most people in this webinar, do not have a legal background. You're not expected to know the basics, let alone the nuances of commercial law. So you have a question specific to this topic, or maybe something even outside the realms of what we're actually discussing today, but it's still business and commercial law related. Feel free to pop that in the Q&A chat box there as well. One thing we're always asked, yes, we will share the slides, and this episode will go on our YouTube page, so you can go back and watch and take notes. That being said, if you have questions, the gold standard is to speak to the lawyer to really flesh out the details. And for those of you who do want to speak to the lawyer or any of our accountants on hand, feel free to type yes in the general chat box, and someone can reach out to give you a bit more of a detailed professional perspective. So for those of you actually new to LawPath, we are an Australian-based online digital legal platform. We're Australia's leading online legal platform for small to medium businesses. And while we reside here in Sydney, we're working with many successful businesses across the whole country. And fundamentally, we offer subscription services. We do not believe startups like yours or small businesses like yours should be paying extortionate fees. Um, so we're here to help for the everyman. All right, so in the general chat bar, you actually see I've included links now to our reviews, some success stories, our page to see our internal lawyers and testimonials submitted by our current clients on the legal advice plan. So feel free to check those out if you want to do your own research and background on what we provide. It's worth noting again for anyone setting up a business for the first time, we provide support in terms of the registration process, but our lawyers and accountants do provide loads of business structuring advice. It does pay to get it set up correctly and set up in a very clever way that may benefit you enormously for tax purposes. Because if it's not set up the right way, I promise you, it's frustrating for you, it's frustrating for us, because we want you to have built the best legal floor for your business from day zero. That applies as well if you want to get some restructuring advice. So you're off for 2024, 2025 on a great start. All we do for those calls is essentially make sure you're fundamentally aware of your responsibilities and compliance. You're in with the optimal structure, so that if you do have to change anything on ASIC, it just kind of limits the added headache there. So today's webinar, we'll be joined by Damon Murdoch. Many of you who are familiar with us know he's LawPath's principal lawyer. He's been practicing for decades and has extensive experience within this field, as well as other legal areas in commercial and business law. And if anyone wants to view our Meet Our Lawyers page on our website and see our lawyers who deal with our legal advice plan clients, you'll see, for example, Damon has a 5 out of 5 star rating out of 300 reviews. But that's enough from me. I'll hand things over to Damon.
Great. Thank you very much, Connor. Hello, everybody. Welcome. Today's a fairly short seminar. It's just touching upon what you want to be doing at the end of financial year. So the first one we always like to talk about is your business structure. So many of you might be a sole trader right now, and you might be looking to incorporate a company, or it might be that you've incorporated a company and you might want to create a more sophisticated structure. So right now is the perfect time to talk to your accountant, because once you pass over June 1st or June 30th into the new financial year, it means that if you're going to restructure, so for instance, if you're a sole trader business and you're going to create a company, you actually have to sell your sole trader business to your new company. And the value of that it needs to be valued by an accountant normally, and it'll come down to whether you're going to be paying tax on that restructure. So for instance, if you personally have your sole trader business, you're going to incorporate a company, the company is going to buy all the assets from you personally. Now, whenever you buy or sell assets, there's normally a capital gains tax issue, in the sense that when you started your sole trader business, it was worth nothing. And now your new company is going to buy the assets, which means that they have to buy it normally at market value. And it also means that you possibly will have capital gains tax. Now, if you were to do it before you file your tax returns, your accountant might be able to value it without relying upon your actual profit and loss for the financial year, and can look at the numbers as they are right now. But once you pass over onto July 1st, then they're going to have to look at your profit and loss, your balance sheet, and your tax returns to determine what the actual value of the business is. So a lot of times people will do their restructuring just before the end of financial year, so that their financial reports aren't locked in, and their accountant can possibly lower the actual valuation of your business. Also, a lot of times people will look at creating a more sophisticated structure. So this is a more sophisticated structure, and I'll explain why people might do this. But if you started off with just a PTY Ltd business, and you're the sole shareholder, it might be a situation where your business is very profitable. And if it's really profitable, it means the company will pay its tax, and then it's going to pay you as a shareholder dividends. Now, just by way of an example, if you had $100,000 worth of profit, your company then pays 25% tax. You have $75,000 left over. That 75,000 gets paid as a dividend to you personally. And if it gets paid to you personally, you now have to pay income tax on that $75,000 that you're receiving. But because the company's already paid tax on that 75,000, it's what we call franked dividend. So when it comes to you as a dividend, you only have to pay the difference between your tax bracket and the 25,000. So let's say you have a 40% tax, income tax, then you only have to pay 15% tax on that 75,000 that you're receiving because the company's already paid the 25,000. Now, sometimes if you have a very profitable business, you might want to do what's called income splitting. And what you do is you sell your shares from you personally into to a family trust. And then you name your spouse and your children and other beneficiaries in your family trust so that when the company pays that dividend, that 75,000 doesn't go to you anymore and now goes into your family trust. And if it goes into your family trust and your spouse isn't working, for instance, you can distribute some of that 75,000 to your spouse who doesn't have to pay income tax on the first $20,000 that they receive because there's a income tax-free threshold. And so there's a way to minimize your tax by doing income splitting. So a lot of times people will create a family trust right now before the end of financial year and then pay out the dividends um, on this side of the year into a family trust. Also, people sometimes want to have a holding company and trading company structure. And the reason for that would be because let's say you have a lot of, let's say you have a manufacturing business and you have a lot of equipment. Well, then you don't want your trading company to actually own that equipment because if you were sued, then a creditor could get access to all your assets and sell them to pay out the debt. But if all the assets are actually held in a holding company, then there's nothing in the trading company. So they sue the trading company can't pay, it closes down, but all the assets themselves are protected because they're in a holding company. That same thing applies in terms of software companies. A lot of times the intellectual property is owned by the holding company, and then it's licensed down to the trading company so that it's protected in the event that anything happens. Now, if you are going to, for instance, um, I guess, lease out your equipment from your holding company to your trading company, then you're going to want to have a lease agreement. And if you have intellectual property owned by your holding company and you're going to license it to your trading company, you want to have a license agreement. And then you also should have what's called a personal property security registration. That's a PPSR. And that's because when a liquidator is appointed, so let's say, for instance, your trading company is sued, it can't pay its debts. So the holding company then basically guts all of the equipment out of the trading company, guts all the IP because the holding company owns it. And because the trading company's committed an act of insolvency, they're allowed to gut the assets out of the trading company because it's a breach of the equipment hire agreement or the license agreement. However, a liquidator can sometimes turn a blind eye to related party transactions, which means they say, well, yes, there's a license agreement. Yes, there's a equipment hire agreement. However, we don't see any evidence of you actually paying a license fee, or we don't see any evidence of you actually paying a hire fee. And therefore, we think this is just a sham, so we're going to ignore it and we're going to claim ownership of all your assets. But if you have a PPSR, which is a personal property security registration, then they can't turn a blind eye to that related party transaction because the legislation under the Personal Property Securities Act prevails. It supersedes the powers of a liquidator. And so that's why it's really important. And just to give you an example, what PPSR is, if you were to buy a car and you had finance on your car, the financier lodges a charge against your vehicle. And when it lodges a charge against your vehicle, if you went to go sell your vehicle, someone that goes to buy it will see that there's an actually charge against it, which means that that financier can repossess it at any time if that loan isn't paid. Same thing with your related parties, companies. Your holding company would lodge a charge against your trading company so that if anything happened, your holding company is the first secured creditor, defeating everybody else in the event something happened to your trading company. So again, a lot of times we look at these kind of structuring issues on this side of the year because if you are going to sell shares or transfer assets, then there's probably going to be capital gains tax issues, and you want to figure out whether you want to do it on this side of the year or whether you want to do it on the next side of the year. Now, if you were to create a company on this side of the year, the negative side of it is that you have to file tax returns for a company that's only traded for 3 weeks. So ideally, you want to wait till next year, but you really need to talk to your accountant if you're going to do that restructuring, whether you should do it on this side or on next year to determine what the capital gains tax effect will be. Now, when we look at the structuring, if you wanted to have a complex structure like I just mentioned, you're normally looking at whether you have a risky business. Are you selling expensive equipment? Are you selling? Are you providing services where you could be sued? These are things where the higher the risk, the more likely you want to have a more sophisticated structure. Other things that you want to look at is hiring. So it's not uncommon where all the intellectual property is held by one company, the trading company has a license to use the intellectual property, and all the employees are actually hired in another company, and they're put on secondment into the trading company and the IP company to develop the IP and to work with the customers. So these are the general questions that we look at when we decide whether it's going to be worthwhile to do a corporate restructuring. Like, do you have any other family members to split the income to reduce your tax, things like that. Now, if you have any questions, drop them in the Q&A, and we normally find that the Q&A section of these presentations are normally the most valuable to everybody. Now, the next one is looking at your workplace policies. So if you've had any issues with your staff, it seems to be the flavor of the month at the moment. A lot of people are having problems with their staff resigning, poaching clients, and taking employees away and starting a competitive business. So some of the things that you want to look at is that if you don't have a restraint of trade or a non-solicitation clause in your employment contracts, you should make sure that moving forward you do. A non-solicitation clause essentially says that an existing employee cannot solicit away your clients or your staff for a competitive business or at all. And a restraint of trade clause says that they can't open up a competitive business. And that's not going to always be enforceable. It depends on the level or the seniority of the employee, but it's worthwhile to look at because you might want a restraint of trade prohibiting your employees from starting a competitive business. Because ultimately, if they do start a competitive business, it's likely they're also going to take your clients and possibly your staff. But looking at workplace policies, there were some changes last year in November, which basically says that it used to be under the occupational health and safety legislation that an employer had to have a safe workplace. And they've changed it to actually put a positive obligation on all employers to take steps to minimize and avoid any kind of sexual harassment. And what that means is there's now a positive obligation that you actually have a workplace sexual harassment policy implemented in your business because you have to prove that you've actually done something to try to minimize and avoid sexual harassment within the workplace. So if you are a LawPath subscriber, you get access to around 400 legal documents, and LawPath has about 16 to 20 different workplace policies. And if you were to just type in employee handbook, that handbook pops up, and then you can choose which policy you want as part of your handbook, and then you tick which policies you want, and then you can create a big sophisticated handbook. The reason why it's important is a lot of times people have issues with staff taking leave, You want to have an annual leave policy that they have to give you 2 weeks notice or whatever it is. You might want to be able to force people to take annual leave. You might want to have a shutdown period during Christmas where people have to take annual leave because your business is closed. Um, you might want a work from home policy. So a lot of times nowadays people are working from home, but uh, if you put into your employment contract, for instance, that the employee can work from home, you can't change an employment contract generally. So we always say never put into the employment contract that it's work from home. Put in the employment contract that they have to work from your office, and then tell them that there's a policy in the business that they're allowed to work from home 3 days a week or whatever it is. Because a workplace policy you can actually change. It varies and it can be amended at any time as long as it's reasonably implemented and the changes are reasonable as well. So things to think about is annual leave policies, work from home policies. Even though people work from home, you're still responsible for their mental health and physical well-being. So if they're to injure themselves at home, you could be liable for that injury. So you want to make sure they have proper tables, proper chairs, things like that. And you can do a checklist to look and see if their workplace is appropriate to be working at home. And if you're ever looking for any kind of templates other outside of LawPath, the Safe Work Victoria has some really good templates that you can have a look at. They normally have it by industry. So there's lots of free material there as well if you wanted to get some OH&S requirements implemented into your business. Um, but the main thing, the importance of a workplace policy is that if someone was to do something, it's probably not always going to be covered by your employment contract. So what you want to do is be able to refer to something if you need to sack that person or if you need to terminate them. And that means that you're going to want possibly a conflict of interest policy. You're going to want a grievances policy so that there's a process to how to terminate someone, or if someone makes a complaint, there's a process outlining how that complaint's to be dealt with. And if that employee doesn't follow those procedures, you can potentially terminate them for breach of the policies and procedures. So that's the importance of having workplace policies, and just a couple of the ones I mentioned are quite important. Um, Now we have the new federal budget that's come out. So just a couple high level points to know about. Um, you have instant asset write-off. So that means if you buy a $20,000 item, let's say on this side of the year, you can write that off completely. So it will reduce your profits by the value of the asset because it's a pure expense. So that's one thing that's quite important. And if you are a profitable business and you see that you're going to be paying tax this year, then it might be worthwhile going buying some equipment or something up to $20,000 right away so you can reduce your tax. Um, Another thing is if you do research and development R&D tax incentive. So if you don't know about it, I'll tell you about it very quickly. So if you're doing any research and development that's innovative that you intend to be using in commercializing, you might be eligible for the ATO's R&D tax incentive. Essentially what it does is it gives you cash of 43.5 cents per dollar spent on research and development. So if you were developing some code or some software, or if you were a manufacturer and you're testing out different products, you can probably make an application for R&D and get 43.5 cents back on every dollar that you spend. Now, normally, that amount, the refund that they're going to be giving you, would be set off against any debt that you owe the ATO. But there is now a discretion where they don't necessarily um, have to offset your tax or tax debt from the refund. So that's something to know, that if you have a tax debt and you know that you're getting an R&D tax refund, you want to talk to your R&D consultant and tell them, look, can you make an application so that that doesn't come up, we get the entire refund and it doesn't go off of our tax debt because we don't want to pay our tax just yet. And then also you can get a rebate on energy bills as well. So just if your accountant if you have those energy bills, you'll probably want to make that application or let your accountant know. Now, we normally say, so the unpaid debts is obviously the biggest pain point for a lot of people. It might not be for your business, but if you found that you do have clients that haven't paid your bills, there's a couple reasons why. So the first thing to look at is we always like to reflect on the past year and see what kind of customer disputes have you had. And normally a dispute arises because there's a misunderstanding by you or them. It's not clear what was included in your services. It's not clear what the goods were actually going to be. And a lot of times it actually comes down to the drafting of your terms and conditions. So if you've had any complaints or disputes, it's worthwhile to go back and look at your terms and conditions and see whether your services or goods are clearly defined, and what's excluded is clearly defined as well, so that you can clarify that so that the customer actually knows what they're getting. The other thing is that I don't know why, but a lot of people have 30-day payment terms. So you issue an invoice and your client doesn't have to pay you for 30 days. I don't know why people do that. There's no rule that you have to wait 30 days to get paid. And we generally don't recommend it, because if you issue an invoice at the end of the month, um, you then perform another month of services. You're now 2 months of services down, and you don't know whether your client's going to pay you or not. And so you can have an entire 2 months of unpaid bills. Uh, and when the 60 days comes up, then you find out that they're not paying your last invoice, and they're not going to be paying your new invoice either. So we normally reduce that down to 7 or 14 days. There's no need for the 30 days. Um, and then also, if you have clients that aren't paying and they're coming up with excuses or asking for payment plans, it's probably because they owe debts to other people. And the greasy wheel normally gets the oil. So if you're just sitting back and giving them extra time, or sitting back and allowing a payment plan, it's probably because they are actually paying somebody else. So you want to get in first, and you want to get in before everybody else. So there's no reason that you have to be nice, unfortunately. If you are owed money, you're going to probably want to collect that money, and you want to collect it as quick as possible. It normally becomes a bad debt if it becomes 3 months. So if you are owed money, you should collect them as quick as possible. And ideally, if you don't have a lot of profits this year, then it would be good to get that payment in before the 1st of July. So have a look at your debts, possibly collect them as quick as you can, because if you don't, they'll probably become bad debts. Um, Now, there's a couple ways to recover bad debts. So the first one is a lot of times you'll hire a lawyer or a debt recovery agent to send a letter of demand. The difference is a debt recovery agent sometimes doesn't actually charge you. Instead, they take 20% normally of the debt that they recover. But a debt recovery agent basically just annoys people. They send emails, they follow up with phone calls, and they just continue. And if anyone's ever dealt with a debt recovery agent before, you know that you can just ignore them, and eventually they can't really do anything. And that's normal when the lawyer comes in and the lawyer actually sues in court. So if you know that this person's just not going to pay you, there's probably no reason to go to a debt recovery agent, because they're just going to ignore them. So you just want to jump in and go straight to court. And so normally a lawyer will send a letter, go to court. Now, if you have a debt that's quite small, relatively small, so a lot of times courts, you're suing in the millions, but uh, VCAT, QCAT, NCAT, all the tribunals, also the local courts have a small claims division where lawyers are generally prohibited from appearing and acting. And if they do, then they can't recover their legal costs at all. So if you do have some debts, you probably can recover them yourself. So NCAT, VCAT, QCAT has a division for civil disputes, and it's made for individuals to be able to bring their own claim, and the forms are quite easy to fill out. So consider just bringing the claim on your own. You don't necessarily need a lawyer to do it. And the tribunals are made for individuals, and the members in those tribunals help and guide people on how to tell their story and how to recover their debts. But if it's a larger amount, then you're probably going to go and get a lawyer. And there's two ways to recover the debt for lawyers. It's suing, or there's another thing called a statutory demand for payment. And a statutory demand for payment is effectively the issuance of legal proceedings. It generally is only issued when there's no genuine dispute and the other side doesn't have any counterclaim or offsetting claim. And so, for instance, if you sold a product, they received the product, there's nothing wrong with it, there's no real genuine dispute, then you issue a statutory demand for payment. They have to pay in 21 days. And if they don't pay in 21 days, they immediately commit an act of insolvency. And then you can file an application to the court to wind them up and appoint a liquidator. And the liquidator will then come in, sell off all the assets, and pay the creditors whatever money's left over in the company. So it's a very, very powerful document. But if you do send it and there is a genuine dispute or an offsetting claim, then the other side can file an application to set it aside. And then you're into the Supreme Court or the federal court. So you got to be very careful about using it, but it is a very, very quick tool that you can get a resolution within 21 days. And it's very powerful because you can actually wind up a company if they don't pay. And if you ever receive a statutory demand for payment, don't ignore it because it is very powerful and it can put your company into liquidation. Now, looking at superannuation, just a reminder that superannuation guarantees going up on the 1st of July to 11.5%. There's been, I think it's over a 5-year period where it's slowly going up to 12%. So we're now getting into the 11.5 realm as of July 1st. So if you have your accounting systems that you might need to update, just take that on note. And then also the Fair Work Act changes the minimum wage, and all of the modern awards will be changing for the hourly rates. So if you have anybody on a modern award, just note that as of the 1st of July, all of the rates will be changing. If you're a labor hire business that have rate cards, you want to make sure that you notify your customers of the change of their rates as a result of the Fair Work Act or modern award rates changing as well. And then the other thing is reflecting. So at the end of the financial year, you want to look at your profit and loss. You want to look at your balance sheet. You want to discuss with your business partners what your plan is going ahead. Business plan's great because that's how you achieve your objectives and your goals. You want to look at what your pain points were, how to fix those pain points. You want to look at your opportunities. And so just remember that this is a really good time that when you're looking at your numbers, when you're doing your tax returns, you can look at your expenses, how you can avoid those expenses, how you can minimize them, what are you paying for that you don't actually need. So it's a really good time to study your financials and then from that use your business plan or make a business plan or update your business plan. And LawPath has template business plans that you can have a look at as well. Also, remember that once we pass on to the July 1st, your books and records are locked. They're locked down. So it's your tax returns are based on your bank statements. So if you are going to pay yourself a director fee on this side of the year, or increase your salary, or make your superannuation contributions, or pay out your dividends, you're going to be wanting to do that right away, and you're going to be wanting to talk to your accountant. And if you have your own business, you might be paying dividends, but you might also want to pay a director fee as well. And you want to talk to your accountant to figure out what way's best to pay you. Is it a director fee or is it a dividend? And there's a different tax effect on that. And that's why we normally want to talk to our accountant before the end of financial year to figure out what's the best way to actually pay yourself. And then the other thing is if you're planning on doing a capital raise, or if you're planning on bringing in any kind of investors or anything like that, you want to get all of your books and records organized. So if you've issued any shares to someone, you want to make sure that the share certificates have been issued. You want to make sure that ASIC has been informed. If you've moved office, you want to make sure that you update your new address with ASIC. If you have any bad debts, you want to consider whether you're going to write them off, which might assist you with your tax returns. You want to look at your creditors. You want to look at whether you've bought any assets and make sure you tell your accountant that those were the assets that were bought so you can benefit from the the ATO's immediate tax write-off for assets that are purchased. And then you have to do your tax returns and your business activity statements. So, well, that's it for now. If you have any questions, drop them into the Q&A and I'll pass it back over to Connor and I'll be back in about 5 minutes. Thank you very much.
Thank you, Damon. Yes, again, just as Damon said, if anyone's got any questions, we'll jump to the Q&A soon. So please pop them in that Q&A chat in the middle there. It can be related to this webinar, but if anyone's also got any questions, as long as they're sort of commercial and business related, feel free to pop them in there as well. As I can only see about 4 or 5 questions at the moment, so we'll have plenty of time to address your needs. So it's a quick sort of brief overview of what to consider as we've gone through for this financial year. If anyone has any more specific questions and want to take advantage, you'll see shortly we have our end of financial year legal advice plan. Damon also rightly mentioned now would be a good time to speak to your accountant. If you don't have an accountant, our accountants provide unlimited consultations to get that tax advice as well as business structuring advice on their own perspective. It's way more tax focused. Compliance, and they can also do your hands-on work as we round out 2024 financial year. From a cost perspective, lawyers typically bill around $500 to $700 for an hour's consultation. Accountants charge about the 150 to 250 mark, depending on their experience of them both, respectively. For those on this webinar, that offer actually starts today. You actually have full reign of the platform with the contract management system, the consultations, and the workflows. But what does it actually include in comparison to the sort of the standard market rate? So a lot of people in the poll have actually mentioned they still have gaps in their documentation. So as Damon mentioned, it's actually we now provide over 500 documents. Now that might be some serious overkill. I doubt business needs 500 documents. Most people here may not need the horse riding waiver, for example. But these documents, they've been drafted by lawyers. They're up to date with Australian legislation, and they're already 99% complete. You would just simply need to fill in the relevant information for you and your business. There's actually a built-in contract management system. It guides you through the document, so it's literally impossible to put a foot out of place. And these documents, with the tools, take about 5 to 15 minutes to complete. They're also fully customizable. You don't get all the features with the free accounts, but when you're subscribed, you can actually delete and remove clauses. You can add in watermarks, logos, and if you are changing things and adding your own provisions or removing provisions, if you do remove something that jeopardizes the legality of the document, it will flag and notify you of that. So there's some safeguards in place as well. That being said, if you're adding your own things, to just check it's legally enforceable, legally compliant. We provide unlimited on-call contract reviews, so no downsides. If you have questions, ask our lawyers. Just to make sure everything's above board. And if there's obviously anything else you might want to ask in terms of tailoring it to your business or to the purpose of the contract, you can ask us that as well to obviously protect yourself and to favor your business more. If anyone would actually like a demo of the platform, I do provide a free video call to showcase all the software features, how to use the documents, how to use the AI features included. So feel free to type yes in the chat, or I'd recommend maybe sending me an email, which I provided my email in the chat box, and we can set up a time from there. So in terms of what the actual legal advice, what does it actually include? It's literally as it says on the tin. It's unlimited consultations and unlimited on-call contract reviews. So these are typically same day if you're booking before 10 a.m. or next working day. So if you are in the move, you need a quick chat around lunchtime, you can easily booking with us, or there's also the live chat available to you there for any quick questions. I know a lot of subscribers are actually also using that for when they're doing the documents. Maybe don't have time to book in a consult. They just want to get a quick answer on a particular clause. They'll pop that there in the live chat to their lawyer. Overall, there's over 100 questions you could ask, but a great starting point is obviously you need to understand the right business structure for you, what contracts, documents, and agreements you need for your clients, for your partners, any suppliers, and then always emphasizing and ensuring they're protecting your interests and your business. We want people to get bang for your buck, so if you're still uncertain about what you should be addressing as the legal foundation of your business, we have what we call accelerator programs included in the subscription, which literally give you the answers and give you the questions you need. I mentioned there's some AI tools. These are great, I think, for outside business hours. And I say that because if you have a lawyer available on the live chat for a consultation, then that's absolutely the gold standard. Um, the AI Look is a fantastic piece of software. It's been fed a lot of Australian legal information. But for me, I personally use a lawyer if and when it's available. Um, the AI is extremely innovative, but the reason I prefer to use a lawyer is always err on the side of caution that there was a lawyer in New York who used ChatGPT 4 and it punched out a bunch of citations, which he then used, which were actually inaccurate or completely false, and he copped a fine for it. Um, so I always err on the side of caution with it. If you have a lawyer for the legal advice, speak to your lawyer. Otherwise, it includes an Ask Me feature. It can draft clauses, which we actually have lawyers who have no affiliation to LawPath using that feature. So good indication is actually doing as intended. Has a review feature, and the one I use predominantly is the simplify feature. So if you're like me with no formal legal background and you're reading a clause and you're not sure what it means, you can actually highlight that text and the AI will re-explain it in layman's terms. If you are sitting there and you have questions around tax, including GST registration, um, but before you do your tax return and maybe also want advice on tax concessions and tax compliance, we do cover this. You have it there in the most comprehensive package, which is our legal and accounting advice plan. Same as with the lawyers, you get unlimited consultations with our award-winning chartered accountants. You may already have an accountant, but look, if we're more convenient, more cost-effective for you, and if you are looking to keep your legal and accounting under one roof, maybe you'll consider switching to us. And generally speaking, a lot of our clients, as mentioned on that subscription, are getting advice around tax minimization, tax concessions, the deductibles, basically getting advice so that you can save every cent, every dollar that you can. So I would re be repeatedly asking them how you can minimize your tax for your business, especially with the end of financial year um, ending and starting afresh with a new one. They do actually also cover business structuring advice, as I mentioned, more focus on the tax benefits. And if anyone's using any bookkeeping software, I see most people are on Xero and MYOB. They can also show you how to optimize the utility of those accounting softwares, which is really, really useful. And finally, they can also do all that hands-on work that most people don't want to do, as so many people unfortunately do it incorrectly. So the accountants can also, with the tax compliance, do your BAS lodgements, tax lodgements, and financial statements. And while, as I mentioned, you do get unlimited consultations with them, they do a special fiscal year consultation, which is really important with this time of year, as I'll go through a deeper dive analysis of your business's spending and revenue and do some projections going forward. If any of that is of any interest to anyone here, please type yes in the chat and someone can reach out to discuss further. You can also reach me on my email and I'm happy to run any demos for anyone so you can see it from our subscribers' perspective.